Clearly, the energy transition issue is a big one, and all you have to do is pick up the papers and know it's not going quite as smoothly as we would have hoped. And it's getting almost crisis-like in certain parts of the world. And what's going on, just the announcement today of Germany not approving the, continuing the approval process for Nord 2, actually had a big spike up in natural gas prices. So, you know, getting to where we want to get to requires planning, it requires time, and it requires having a sense of how much can you do, how fast, and with the resources that we have, and how do we save the planet at the same time. It's a big process that we're going through, but getting the planning right seems to be something that we haven't quite nailed on this globally. And coming out of the COP conference, you know, what you heard was we're going to try, but certain countries with big populations are going to be on coal for quite some time. The OPEC put out a report about a month ago that said from 2020 to 2045, the increase of different sources of energy are going to see about a 30% increase in sustainable energy, but also that oil and natural gas are going to see about 16 and 21% increases over that time period. So how do we affect this transition is going to be one of the really important things, but you can't do it without a plan, and I don't think we've had the planning quite nailed yet. And what's happening from the fossil fuel side of it is, as their investments were being pulled back by the investing community, they were pulling back and not investing for growth at a time that feels like the aspirations are ahead of the actual ability to deliver on the new fossil fuels to offset it. So that's the stage we're set. They're great opportunities. We talk about them a lot here. Greg's going to give you a sense of the different phases of the energy transition, then we'll open it up to questions. So with that, we'll turn it over to Greg and leave it to you, Greg.
Thank you, Stephen. Can you hear me?
This on? Can't get him yet? Okay, so we're not going to leave it to Greg just yet. So I want to just talk a little bit more about, we did a seminar on this, I guess it was back in October, we were talking about the transition and the challenges, and I think there's a couple questions that are worth asking as we do this, and I'll just throw them out as things that we think about when we think about the energy transition. And you know, clearly what's going on around the world, whether it's in China, the power problems they're having, what you're seeing in Europe with the power problems, and even in our country, these rolling power issues are just going to continue to increase because we think the weather problems are going to continue to increase. But then you have this climate transformation still in the early innings without really clear guidelines as to how we're going to get there, and governments are trying to do it, but if you're a government leader, you always fall back to the most important thing to you, which is taking care of your own country, not trying to help the world. And that's with the financial problems that countries are having and the different speeds the economy is running in right now, that creates even more problems and more strains. But fossil fuels have been powering the global economy for hundreds of years, and how we make this transition, how fast we can do it, I think that's one of the big issues that we have to fine tune and get better. But I think there's a couple questions that we should be asking, and one is how quickly can we practically make the transition, not wanting to make it, but realistically, how fast can we make it? I think the other one is how long will the supply and demand imbalances that we're seeing around the world continue, and if we can get them squared away, because a lot of this is done very locally. And then how will the Delta variant continue to affect, and as we continue to have this going, it's going to change the dynamics, because we could have a surge in the use of energy because of the reopening of the economies more fully. And then the other question is, where will the respective prices be of the different fossil fuel sources or different fuel sources going out in a couple of years, because the subsidies and some of the challenges, it's going to be hard. The good thing is the tech advances that are coming can really accelerate and speed up the process. So let me turn it over to Greg now. I think we're teed up, is that correct? All right, Greg, over to you.
Okay. Great. So you can't hear me, is that right, Stephen?
Yes, we can.
Okay, great. Well, thanks so much for allowing me to participate today, and I apologize for not being there in person. And if John's still there, I congratulate John on a great presentation, and I'm going to unabashedly transition to my conversation using two parts of John's presentation, which I think are right on the mark. And I think the first one is around Milton Friedman and Keynesian economics. And I think ultimately it's not going to be impact investing that gets us to a long-term solution that we all want. Whether you're left or right on the spectrum, it's got to be economics that takes us through this transition. It's not going to be people willing to accept lower returns. In fact, the pressure on all of us to generate returns is only increasing, it's not decreasing, particularly at the pension level and the endowment level. So it's going to be, as we invest in energy transition, we got to be thinking about this as capitalists. What are processes and companies that we can invest in that will generate outstanding cash flows and benefit from this incredible tailwind that we're all going to see at the corporate and sovereign level that is going to be focused on reducing carbon emissions? And then secondly, it's Jane Goodall and his comment on wise eights. And I think what's missing from this conversation of energy transition, given we're at such early stages of this, is understanding that carbon, in fact, is a commodity that's no different than gold, aluminum, any other input into the industrial process. For the last 150 years of industrialization, we've had our carbon for free. And none of this transition can happen until we have a price on carbon. Now, whether that's a carbon tariff, which I think is the most likely outcome, or a carbon price for mandatory requirements. But at the end of the day, carbon is a commodity. And I can best illustrate this by giving an example. And if you think of a good produced in the US versus a good produced in China, a unit of kilowatt in China is much dirtier to produce, given 75% of their electricity comes from coal as an input, much lower than the US. So as we think about goods that are being imported and exported from our trade partners, I think it's an inevitability that we have to eventually say that carbon is a commodity and add that into the price to standardize one good versus another. So I think, John did me a favor with those two parts in his presentation, because I think that puts it in as a nutshell. To give you 30 seconds on Waterton, I founded Waterton roughly 3 months ago. I was historically the CIO at the University of Pittsburgh. We were big investors in energy transition and an early adopter at the University of Pittsburgh. And it became obvious to me that energy transition is a misunderstood and undercapitalized area of opportunity, and it's going to be like this for the rest of my career. And so how do I capitalize on this opportunity while making the world a better place? And if I was to summarize what are the things we focus on and how do we invest, we think about the world as a capitalist. And where is that commodity of carbon the cheapest, and where is it reduced the most cheaply? It's the antithesis of what we're used to with gold, aluminum, copper, where we want to produce it at its lowest cost. In the case of carbon, it's the inverse, in that how do we extract carbon at the lowest cost? Instead of producing it, we want to pull it out of the industrial process. And I don't think this is recognized yet as we talk to many investors. I think there's two simple questions as we think about energy transition. What's the cost to reduce the carbon, and how long does it take? And that leads me to the phases of energy transition, the slide that you see up there. I think the most misunderstood thing about energy transition is what's the tenor? And we've all seen this week, or the last 2 weeks really, the euphoria around Rivian and Lucid. And I think what's missing about this conversation about those two great companies, they are great companies, but they're many, many years away from being viable solutions. And you never hear anyone ask the deeper question of what is it really costing to reduce the carbon that you're pulling out of the economy per dollar of CapEx. And I think if people went through that analysis, they would see very quickly that Rivian and Lucid are incredibly expensive carbon alternatives versus other things that exist in our economy. So as investors, I think the key in the next 5 years is getting your hands on the entities, on the companies that reduce the most carbon for the lowest cost. So that when that market eventually does wake up to carbon as a commodity, you're already going to have your hands on the most profitable and subsequently the better positioned companies that will be the most highly valued and sought after once the market recognizes that it is about carbon reduction. So there's going to be 3 phases in the way that I put this graph together. The first phase is asset optimization. So how do I use today's assets to reduce emissions? How do I alter, how do I use them? And that could be process, that could also be technology. The second phase is going to be asset replacement. So if we think about this in terms of our everyday lives, most of us don't sell a car after 2 years or 3 years. Many of us will drive it for many years. In fact, the average automobile is now on the road for over 12 years. People just don't go out and buy a new automobile because they want an EV. They'll go out and buy an EV when their existing internal combustion engine automobile is no longer suitable for what they're trying to accomplish with their car. So asset replacement takes decades. Same thing with a coal power plant. Utilities, which are already in a terrible, terrible industry, they're not going to go out and mothball a coal plant in the existing environment. They might mothball it in a scenario where carbon is priced. And likely, if carbon tariffs do come into the marketplace, we will see accelerated asset obsolescence. But as it stands today, asset replacement, coal power plants, internal combustion automobiles, it's going to take decades for those assets to work their way out of the market. And then the last one, I think this is the one that's the most misunderstood, frankly. And I think sadly, it's the one that is leaned on the most by media, which I think causes a lot of misunderstanding in the marketplace about where are we really in this energy transition. And I think hydrogen's the best example of it. We think about hydrogen today in the way that it is currently used in industrial process. It's a very important part of semiconductor manufacturing. It's an important part of the food industry in terms of converting unsaturated to saturated fats for things like butter. It's important in fertilizer. So this is already an important industrial process. And if we think about using electrolysis, which is the most highly sought after use of green energy for hydrogen production, if we used electrolysis to generate all of our existing hydrogen, that would be the equivalent of all the electricity that's currently consumed on an annual basis in Europe. It would be a huge undertaking just to create clean alternative energy to create existing demand for hydrogen. Forget the alternative demand that would come from having this in automobiles, tractor trailers, airplanes. It would be a huge undertaking just to get existing hydrogen demand green. Forget the movement towards additional hydrogen demand. So as we think about how we invest at Waterton, it's almost entirely phase one. It's such a cheap market right now and an underutilized market that people don't understand. If we can think about where is GHG emissions produced, this graph really sums it up. 80% of all greenhouse gas emissions come from CO2, and on a CO2 equivalent basis, methane is only 10% of greenhouse gas emissions. So if we really want to get at where the carbon is the cheapest, where the greatest opportunities exist, it's actually in traditional CO2 emissions. And we hear lots of projects going on with respect to methane. In my opinion, I don't think methane got a large enough total addressable market in terms of trying to capitalize on areas. So things where we see agriculture, where you're trying to capture waste from pigs and cows, Or, you know, we've actually seen projects where people are trying to capture burps from cows. The market just isn't large enough. But if we can have CO2 solutions that can capitalize on some of these methane emissions, that is then a viable solution. But CO2 ultimately is going to drive our investment theses for the foreseeable future. And we think the two greatest areas of opportunity are transportation. And transportation is primarily truck transport and automobiles. And to put that in context, the US burns roughly 20 million barrels a day of gasoline, of oil. 8 million of that 20 is used for automobile gasoline. Roughly 40% of our oil consumption goes to automobiles. So that's an incredible area of opportunity. And then electrical generation. So it isn't just traditional electrical generation in the way you think of a power plant, but it's also electrification of processes. So can I make buildings more green using electrical pumps rather than natural gas pumps? Can I use solar panels on windows instead of traditional windows? So it's electrification in all aspects of it, from generation to transport to the infrastructure that supports projects. When I was at Pitt, we made 6 investments, and they were equally split between transportation and electrical generation. And all 6 of those companies have an incredible growth tailwind where EBITDA is growing at over 10% in all of those companies. And the companies were relatively cheap on an EV to EBITDA basis. And so this area of opportunity is still misunderstood by the market, and it's where we see our greatest opportunities today.
Greg, we can open it up for questions, or you want to wrap up with a comment? Questions? Did you hear that? Greg, if you have a closing comment, then we'll open it up for questions. Or should we just take questions?
Questions for Greg?
Questions for Greg.
Or just to the whole group on this energy transition subject.
Or comments. Thank you, Mark. Yes, in the back. Can we get a...
One thing Phil Don, he would run, right?
Yes, he would.
You didn't see that. Easy.
So I believe the obvious question in any transition in energy is how you deal with China, Russia, and India. Because without some kind of plan there, everything else, you know, will have some impact, but not the type of impact that everyone's looking for. So, you know, if you have that answer, you could go right to DC, just get on the Excella train and, you know.
John?
Comes down to economics. And the only thing that is going to drive this argument is economics. And tariffs are going to be the only way that we do it. So it's got to be a carbon tariff where we're pricing the goods that come from all these markets and incorporates the carbon that they're emitting. I think that's the only thing that's going to drive economic decisions in each one of those countries you just mentioned.
Hi, it's John. So let me add this color. Bill Gates wrote a book earlier this year, How to Avoid a Climate Disaster. And the central thesis of his book is that we don't have the technologies to avoid a climate disaster. And I testified in front of the US Congress several times on this. I think every time, going back 15 years, encouraging Congress that it didn't happen to create an NIH equivalent for breakthrough sustainable technologies. The NIH has an annual budget of $30 or $40 billion and created cures to cancer and diabetes, and the mortality rates would be much higher without them. That's where we are with sustainability. So we're not there, we don't have that, but if we did, an answer to the China and India and other questions is, question would be an innovation that reduces their cost of producing energy. That would be the best energy transition, but we don't have that because the public policy in America hasn't permitted it.
I would just add that I think if the U.S. doesn't do it as the number 2 emitter behind China, it's going to be hard to get China, Russia, and India to come along as well. So if we don't get our act together, it's going to be hard to tell other people to get theirs together, although that's something we've done in the past and haven't had any problem with. But I think in this one, they're not going to change, because if you're a leader of any country, your first obligation is to the country, not to the world. And with the economics, and to Greg's point, with the economics overall, it's very hard to get people to focus on anything but what's their own population's needs first. And so there's a balance that I think they're going to have to deal with as we go forward. I saw a question in the chat, Mark. I didn't see what it was, though.
It was me saying that we're going to start at 2:05.
Okay.
A combo, well, thank you for teeing that up, thank you. A combo of the opening panel, which I completely did a hand wave on. This is a 2:30 panel?
Yes, I know.
Okay, yeah, thank you. Wouldn't it be nice if you just told me that when I told you it was going to happen?
I thought you were ad-libbing again, so I just went along with it.
I am ad-libbing. All right, so
I didn't want to be the problem.
Phil Donahue would not ad-lib, so I know Phil Donahue. So 2:05, 2:06 now, combo of the opening and the NextGen panel, Kirby and I will co-moderate. But another few minutes of questions on the energy topic.
Yes.
Go ahead.
Thank you, and thank you for this very important, enlightening discussion. And speaking about climate, it's hard for many to think about climate without thinking about global warming. So can you integrate this in this conversation?
Well, I'm a big scuba diver, so I've been following the water temperature changes and how that's being ruined and what that does to the food source as well, and we have real issues there, so that's an issue. The other fascinating thing, that the jet stream is starting to wobble. It normally would be tight, and now it's wobbling, and that's creating all sorts of violent weather patterns that are going to create real economic hardships for states and for countries right now. And look at the Caribbean islands, and they've actually run out of names for hurricanes for the 3rd time already this year, because we just are having much more different storm patterns. So I think that is a real issue, and we're going to have to deal with it, but it's all part and parcel of what's creating it, and it's all the emissions. So, and we gotta solve this one thing at a time. I don't think you can solve it with trying to do too many, and I think that's part of the problem. We have limited sources, and you have to focus on things. If we just eliminated coal, for example, and started with that, you'd have a big upgrade on the global economy. But how do you get China and India off that? You got to give them a cheaper alternative that works for them, and they have the supplies for it. So I think we're going to be in this problem for quite some time. This will be a long transition. I don't know if transition is the right term. When we talk about inflation being persistent or transitory, I think this is going to be more in the persisting camp than in the transformational camp for longer than we want to see. Greg, closing comments from you?
No, I think you're right. It's going to be a multi-decade transition. It's not going to be quick. Can't hear me again? Got nothing.
Yes, we can. Go ahead.
Well, you can hear me now. Okay. So it's going to be multi-decade. It's going to be long and persistent. And John's comment around technology, it's going to be a must. There's going to be many process reinventions that go on existing assets that will lower carbon emissions.
Which is one of the problems I think we have with so much of all the debates we have today is one side has to be right and the other side has to be wrong. And I think the challenge with the fossil fuel industry, which we're going to rely on for some time, is how do we bring them in instead of vilify them and leverage the technology, the data, and the information they have to create the solutions. And if we don't figure out how to bring corporations in to solve problems instead of making them the problem, we're not going to succeed in this transition. I think that's one of the things as voters, we have to make sure we're not vilifying people. We need to change the world, because if we keep doing that, we're going to have worse problems. And you're seeing it now with the oil prices going up, natural gas prices going up. Things that are abundant, they're bad, but they're abundant. They're going to help us through this. And if we don't get that right, I think that's going to be one of the things that's going to hold us back for a long time.
So listen, every Tuesday at 11 a.m. Eastern, we get together. Some of you are on it, some are not. It's a half hour you shouldn't miss. Stephen kicks it off with the subject. This same discussion happens every Tuesday, 11 a.m.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.